Hello once again, it's Dave Knight here at 123daytrade.com, and I want to welcome you to this video. I want to try to make this a pretty quick video today because I want to show part of one of my trading rules that I've incorporated inside of my trading strategy here on the CL power or crude oil power. And if I would put it into the frame of mind of where it goes into the trading strategy, what I put it is right here. It says blow off volume, and I want to talk about blow off volume as it relates to trading. Now SA is always there, you know, SA means see above, right? So one of the things has to happen, but it's usually in descending order is how I'm looking at as the trading rules come across, and each one of them outweighs the next one, right? So that's kind of the way I look at it. Let me get rid of the screen draw tool, and then let's move to the chart. So here's the chart that I was looking at, and this is actually the action of the market pre-market, or in other words pre-open open outcry, that is, of the crude oil market. And I want to look at this particular bar as it relates to the price action, right? So the price action comes roughly in this area, and it makes a little bit of a low right in this area, and then it comes off that low. This is what I call, for lack of a better way of calling it, I call this an RBV, and excuse me for trying to write that. So red bar volume, and I call it an HVS, and HVS stands for high volume spike, and this is a blow off volume. So blow off volume, and it looks like a skyscraper, or basically I call this HVS. Another way you might have seen this on some of my videos is I'll call this sky, or it's standing for skyscraper. Alright, and it looks like a skyscraper because there's nothing around it. It's like all by itself, and this is the way it looks like normally when you see blow off volume. This was above 2300 if I remember right, and that above 2000 all by itself, and pre-market, this is what I would consider blow off volume. And what this is telling me is an overall is that there was a lot of buying that went on, or short covering, however you want to look at it, at this particular moment in time, and it would take a lot of momentum to drive the market down below this mark. One, pre-market, after it based, and two, during the normal trading session, it would take a lot of momentum and buying, or selling, excuse me, to drive this market, in my humble opinion, to get down lower than this, knowing that this is the volume that you're looking at. Alright? So, taking into that account, that's how I approached my trading session as I went into this morning. And here was the opening range, 8 to 805, and the opening trade, I believe I got in somewhere around this area when it came back and around, and then I lost 17 ticks on the first 2/3 of an entry, and right here is where, let me get this so you can see it, right here is where I came in on the market on the long side, overall right here. Whoops, get the screen draw going again. I staged myself into it on the second buy series, and I used this as a tool to help me get in on the second contract. I came in at 47.05. I used what I saw from the previous range from here to get me in on one side of the contract, because this ends up being pretty much what you would consider a double bottom. So there was a bottom that's not shown on the charts that is on that high volume spike. So we see that we're going, we have a bottom is what I'm getting at, a double bottom, or our price pattern basically is showing something like this. And so what I'm thinking at this point in time is the market is getting ready to do this. So this was our 1, this is our 2, here's our 3, and then I was getting in here and then here to get myself into the trade, and then in a 2 contract series, that's pretty much how I approached a trade as an overall trade. Now, exit related, This was, I believe this was the 1P target area right there. Yeah, this was, I believe this was 1P. Yeah, there it is. And this was my trade exit on the first contract. And then the second contract, this was second 2. And then I believe it goes up to the pivot point, and then on up to, if not close to, I think it gets within 1 tick of 4P if I remember. And then the trade exit itself was right here at the 2P mark. So I was trying to give it a little bit of room here at the pivot point, hoping that we were going to continue the escalation up. I could have taken 3P out on the trade, being so close to 4P on the trade, but I was able to capture this particular trade. First trade series, I had 1 contract in, lost 17 ticks. The second contract series, I got 2 trades, and I was able to take out 106 ticks out of the market. As an overall today, I had 89 ticks on my trades, and I quit trading after this, being up a net of 89 ticks on day number 1 of I guess the 50K combine that I'm in right now. That will do it for this video. God bless, take care, and we'll see you on our next video that I put together. Bye for now.